Ranked among the top public universities in the U.S., the Ohio State University Fisher College of Business provides an outstanding MBA experience tailored to your interests and leadership development. Whether switching careers, enhancing a career, or starting a business, an MBA from Fisher provides tomorrow's leaders with the knowledge and skills to succeed today. Visit fisher.osu.edu to learn more about Fisher's personalized MBA program and competitive scholarship opportunities.
Welcome to the Touch MBA Admissions Podcast. Do you need help figuring out which schools to apply to or how to get into the world's top MBA programs? Hey, you're not alone. Join thousands of others on this podcast and on our site, touchmba.com, as they seek the admissions edge. And now, here's your host, Darren Joe.
Hey, what's up, guys? It's Darren, the host of the Touch MBA podcast. Thanks for listening to the show. If I may start this episode with a request, if the show has helped you with your applications or given you insights or encouragement along the way, could you please help us by leaving us an iTunes review or a review on whatever podcast app you use? I would really appreciate it. And it just helps more people find the show, more people discover us. So those of you using Apple phones, if you just click into your podcast app, you need to subscribe first to the Touch MBA podcast. And then once you're subscribed, open us up, scroll down, and then you can leave a review. I'd really appreciate it. And, I hope it doesn't take more than a minute of your time to do. So please, again, if the podcast has helped you, please leave us a positive review on iTunes. This week, we're continuing our career series. This time, I brought on my good friend Garrett Wong, who's working for Hewlett Packard Ventures, to talk about venture capital, a much desired industry for MBA graduates these days. And I hope you take away a lot from this conversation. I surely did, about how to break into the industry. First of all, it's a numbers game. It's tough. There's only so many VC firms. VC firms only employ so many people, say 10 to 15 people on average. And so it's tough to break in, but you definitely can do it. And so much of it is about building up your story, right? Because there's really no direct route into the industry, but there's definitely paths, and we discuss those. Also, in the show notes to this episode, you can find a list of the top, 100 venture capitalists. I also include a nice little one-page printout of all the top venture capital companies. So for those of you trying to do more research into the industry, I think you'll find those links useful. You can find them at touchmba.com/MBA-careers-venture-capital. And of course, remember that at Touch MBA, we offer free school selection help. All you need to do is upload your work experience, your educational experience. You can upload your CV, tell us what your career goals are, and we'd be happy to give you recommendations on what schools might fit you best, and also give you some tips for how you could improve your profile before you submit it. So go check that out at touchmba.com. And let's get straight to my conversation with Garrett Wong.
I've actually known our next guest since I was 8, which means that I'm really old because it's been multiple decades since we've met. But we actually played high school tennis together way back in the day. And it's been great to see our next guest, Garrett Wong, grow and mature in his career, and now he's a venture capitalist. So Garrett Wong, thank you so much for joining the Touch MBA podcast.
Great. Thanks for having me, Darren. It's great catching up again.
Yes, exactly. This is a great excuse to catch up. So last time I think was 4 years ago, we were out on the tennis courts.
Yeah, that's right.
Yeah, let's just jump straight into it. So Garrett, could you give our audience, a brief introduction of yourself, what you were doing before school, where you went for business school, and what you've done since?
Yeah, absolutely. Yeah, I guess I'll try to keep it brief, or maybe not too long. I after I guess our high school days, I got my electrical engineering degree at UCLA, so it went along the engineering route, but became a little bit more interested in business and finance. So I started my career in investment banking, covering the technology sector. Did that for a couple of years. Then I did corporate development at Cisco Systems. So half my job there was mergers and acquisitions on behalf of Cisco, and the other half was making venture capital investments there. And I did that for 3 years. Then after that, I got my MBA at Wharton. I did a couple of different internships in a couple investing roles. One at a hedge fund, one at a private equity firm. And then after, that was my summer in between my first and second year. After Wharton, I consulted a little bit at a startup private equity firm before that was also doing technology investing. And then I did that for a little bit. And then I went to a startup in where I was, early stage startup. I was doing product management strategy there. Did that for about a year. That took me to late 2015. And then from late till now, I've been in venture capital at Hewlett Packard Enterprise or Hewlett Packard Ventures. And so I've been doing that for 2 years, investing in what we think are promising startups in the tech ecosystem.
Yeah. And so obviously before our call, I was looking at your LinkedIn, and you've done 3 to 4 things, right, since graduating from Wharton. Is that common for someone in your industry?
No. I don't think it's that common.
Yeah.
It was it's not that common to move around that much. I think, I tried a couple of maybe more entrepreneurial things after school. So one was a startup fund, startup private equity fund. It was middle market investing. We started out with about 75 million to look at, smaller technology investments. And, as sometimes startups go, the fund didn't really go anywhere.
Yep.
And then they decided to change their strategy and kind of pull back a little bit. And it didn't wind down immediately, but I think it's wound down now. So, I needed to move on, right? Because the strategy wasn't really working. And then, I went to an actual startup. I thought that was, it was interesting because after school, I wanted to get into venture, and the startup private equity fund. It was labeled private equity, but it was kind of a lot of the partners I was working with had more venture background, and so we had a more operational focus, and so rather than just purely investing focus. And so, there's sometimes either a theory, or depending on who you talk to, whether to get operational experience or investing experience in the venture community. And so, and of course, a lot of what I've seen, and some of the partners I was working with were former operators, even though we were investing. And so I wanted to try to do that and get some operational experience myself.
Yeah.
So I joined an early stage startup, and it's like the life of a startup can vary, of course. And, mine was about a year. And so, or at least my tenure there. So, yeah, it's actually still around, and I think so I'm located in the San Francisco Bay Area right now. And, a lot of times I wouldn't encourage people necessarily to jump so often, but if you see someone be at a startup for a year, and especially in the Bay Area, I think people are a little bit more understanding, I would say. But generally speaking, I would say I probably made a couple different moves, or maybe made more moves than my peer group at this point after school.
Yeah. Yeah, no, I find it really interesting because as entrepreneurship and startups become more of a target for MBAs, I think that sort of thing will become more common. I mean, that's just my personal opinion, but that's why I wanted to ask you that question, so you could kind of give us, a ground level view of why you made those choices. And but let's talk more about what you're doing now as a venture capitalist.
Sure.
Could you just first tell us in broad strokes, what does a venture capitalist do?
Absolutely. Yeah. So, venture capital in a nutshell, it's, it's investing, making investments in what we think are promising startups. And in this case, they're startups don't have to focus on technology or be in the technology industry, although it's sort of it tends to be the norm.
Yeah.
I mean, but you can have startups in almost anything, but in any industry, in theory. And a lot of times it's either technology or, healthcare is another big industry vertical.
Yes.
For venture. But, so at Hewlett Packard Enterprise, we focus on, or, the venture team within HPE, we focus on technology. So, so we make investments in early to mid stage companies in their life cycle. And usually a venture capitalist you'll evaluate the companies and management teams based on their merit. And if you think it's going to grow into a meaningful, viable business, and typically a venture capitalist would invest. Typically it's in an equity portion of the startup and then work with that startup to help it grow. And, that can be anything from advice to taking a board position and things of that nature. And then, you're helping work with the company as it evolves and matures into a larger company. And then hopefully as an investor, you're hoping that startup exits. And that's commonly in the form of either it gets acquired or the company hopefully goes public in the public markets. And you would make a return that way.
Yeah. And typically you're working with these companies for roughly how long?
So that can vary. Are you talking more on a day-to-day basis, or are you talking more how long are they in the portfolio?
Oh yeah. How long are they in the portfolio? But also, how much do you actually interact with the companies too that you help with?
Yeah. So there's never, as you can imagine, there's never a straight answer for either question. So as far as the time frame of a company in a portfolio, I mean, it's so that can vary. It tends to be if a company gets acquired. And also, let me take a step back. It depends how mature the company is.
Yeah. Because
if you're investing in a more mature, later stage startup, or maybe what's commonly called a pre-IPO company, where some investors will invest in that round before an IPO. So by nature, they're not going to be, that company might not be in the portfolio that long, maybe a couple years.
Yeah.
And then, but just more broadly speaking, right, if we're talking about two exit paths, an acquisition or the public markets, acquisitions, those are hard to tell. You never know, right? But I would say, a company is commonly in your portfolio for, 2 years or more before it gets acquired. But that really varies, right? It varies on how early the company is or not.
Yep.
But I would say usually it takes a couple years just for a startup to get some meaningful traction to be acquired, to be attractive enough to an acquirer. And the public markets, if folks have been following how funding has trended in, I'd say, the past decade, in years past, it might have taken, I don't have the statistics offhand, but let's say if it took a company maybe 7 years, 7 to 9 years before from inception to IPO, that time frame has gotten much longer in the past decade as a lot of companies, as a lot of bigger institutional, some traditionally public markets investors have invested in venture, like mutual funds, and a lot of sovereign wealth funds have gone into venture investing in late stage companies. And so if companies are getting, like Uber, for example, or Lyft, or some of these late stage companies, if they're getting financing much later, then it prolongs the length of time that they're a private company before they go public. So you're seeing companies now stay private for maybe, it could be 9 years, 11 years. So that window has gone a little longer from an IPO standpoint.
Yes.
So it's hard to, and so that's kind of the length of time before an exit. And then of course, where you enter as an investor, right? If you're an early stage investor, you could be waiting a long time. If you're a late stage investor, as I was mentioned before, at a pre-IPO stage, maybe you're not holding it that long, but you have each investor has different return characteristics and investing criteria. And so it's not like one is necessarily better than the other. It's just, right. It's how each of those maps to what they're trying to achieve.
Got it.
Then, so that was maybe that was a long answer. Should I answer the second part of your question about?
Yes, please.
Working. Okay. So, and then on a, how much time am I working with the portfolio companies on a day-to-day basis? I think so that will vary too. And generally speaking, I would say that the more mature the company, the less you're probably working with them, because they generally it's a little bit more of a well-oiled machine.
Yeah.
Maybe you're getting, regular updates at board meetings and you're checking in here and there. I think generally speaking, at the earlier stages of a company, they might need more guidance. They might need more customer introductions to, get customer traction, maybe more introductions as far as recruiting for, building out their own executive team. It can be a number of different things, but so that varies also. I know that's maybe not a straight answer, but in an ideal world, from an investor standpoint, the more well run, or the less you have to do as an investor, then the better it is.
Right.
So that's always the case.
Yeah. Got it. No, it's crystal clear. And so what are the common entry points for MBA grads into this industry? Is it through summer internships, or is it through, that first job? How did you and your peers approach trying to, well, in your case, I guess, break back into the industry?
Right. So, venture capital I think it's notoriously hard to get into. And, I think one of my colleagues, or, one of my classmates, I should say, had a joke that after Wharton, it seems like there's, at any one time, there's 0 jobs in venture. And, I'm not trying to discourage the audience here, but it's, there are a lot of different ways to get in, which is the good part. What's commonly, so the tried and true method is people who've done venture before is that's sort of a natural, it's not a guarantee, but it's obviously a natural segue into going back in. A lot of folks have had, maybe they've had either investment banking background or management consulting background, and maybe they've built either, some sort of expertise around, let's say, investment banking more, I think, from the financial and deal experience, and then management consulting. Let's say if they've spent a lot of time with technology clients and they understand the industry and the trend well, then that would help for venture role focused on technology, for example. So a lot of times those are common paths. If not those, a lot of times what you'll see is, I think what's important is venture firms they can be very different as well. And so you kind of have to look at the nature of the partners and their backgrounds at the different firms. And so for example, if a lot of people have more finance background, then maybe the investment banking or former venture investing background would help. If a lot of the backgrounds of the partners are maybe they're former operators, former CEOs, then someone who's worked at a startup in a meaningful role, and of course they're looking for successful startups, as you can imagine. So like if you're if you're in product management at Uber, or not necessarily startup, or like a Google or Facebook, or you did meaningful, business development work at let's say a strong e-commerce company, or let's say you're like high up at jet.com or something before they got acquired, and if someone's looking for commerce or consumer focused tech investing, that could help also. So it depends on the VC firm as well, and what they're focused on. So I would say those backgrounds I listed, either former investor, banking, consulting, or former operational experience that could have relevance to the VC firm. Those are, I'd say, the most common routes.
So then if there's 0 jobs, as the old joke goes, at least with your friends, right, for venture capitalists, how the heck do you get your foot in the door, right? Even with your MBA from a top business school, is it just cold calling companies? I mean, obviously you have your network, your own personal network too, but how do you get your foot in the door, and how does Wharton or a school like Wharton help with that? Right.
So it's jobs. Some firms do post online. A lot of them, to be candid, don't, or they might go through a recruiter, and and so going through recruiters, that can be hit or miss. It really only, recruiters are incentivized to make a transaction, so they really only help if you have former venture investing experience. And so let's say if you don't, and you're trying to get into the industry, then a lot of it honestly is networking, and I wouldn't view that as a bad thing necessarily, because this business is about networking. And so, like that's a tremendous part of the job. You're networking with, whether it's other investors, you're networking with startups, because you're ultimately trying to invest in them, right? And trying to, for lack of a better word, you're trying to win them over with your money. So, so a lot of it's networking, and I think, and it starts whenever you want to go into this industry. And so I know, a lot of my classmates who wanted to go back into venture, they essentially started their first year in business school. And like, let's say you're reaching out to firms. You say, "Hey, I'm in town. I've done this and this." You have to give people a reason to respond to you, of course. You can't just coldly email, but it's like, "Hey, I've done this, or I've seen you've invested here, or like I have some interesting thoughts. I've spent some time looking at this subsector and some interesting thoughts," or, whatever it may be. But I think with an MBA, and in my case, a Wharton MBA, what's really refreshing is you'd be surprised how many people respond to your email. I would encourage folks, people do respond. You just have to give them a reason to respond. And you'd be surprised how many people actually will take a call, and of course, be professional, be tactful about how you reach out to people. But it's, it's like, "Hey, I have some thoughts in this space," or, I might have, I'd love to bounce some investment ideas off you. And I've met with a couple, I've seen you've invested in a bunch of financial tech or financial technology. So fintech. And I've spent a lot of time in this area, and it can be something like that, but it's also a lot of networking. Yes. And do you think having that elite MBA really helps? I mean, as opposed to, say, MBAs that aren't in the top 10 or top 10 MBAs, like, does that really make a difference? Or do you think if you have something to offer of value, as you say, you can also have a pretty good chance of breaking in? It's hard for me to answer that, because I only, by definition, I only came from one school. So I don't. It's hard for me to compare to other folks, and I never asked other folks. And my a lot of my network tends to be like, folks I went, same schools, right? Similar schools, I guess. But it's hard for me to answer that. I do think if I were to try to take things in a positive way, that if I say, it certainly doesn't hurt, right? Yeah. Like, if I tell a story in a short paragraph, why I'm interested in your firm, and I'd love to learn more about how you invest and bounce ideas. And hey, I have, look, I'm either a current Wharton student, or I just graduated, and people, my classmates and I are a few years out now, and people do the same thing, a few years out. You contact other alumni, and hey, or it doesn't even have to be the same school. Hey, I'm a Wharton grad, something. I'm sure it doesn't hurt, but I can't tell you, it's hard for me to compare Wharton versus, that response rate of Wharton versus someone outside the top 10.
Yeah.
I do think if you have full to say though, like that should, I would think, if I'm being, optimistic, I would think that would encourage a response.
Right. If you had something of value to offer, right?
Yes. Or pretend you have something to offer and then come up with it by the time you have the meeting.
Yes. Yes, exactly. Exactly. And do most MBA grads come in at the senior associate level, right?
Yes. Yep. That's very common. Yep.
Okay. And then, so kind of the structure of the industry is associate, senior associate, principal, and partner. Is that accurate?
That's generally true.
Yeah.
Yeah.
Yep.
Yep.
Cool. And what else? So, I mean, I wanted to ask about the recruiting process because, so many industries like management consulting firms, there's a whole recruiting process for that, and investment banking as well. But it sounds like for venture capital, It's very kind of amorphous.
Absolutely. Yeah. It's, And so I think, that is the nature of the industry. And to be fair, a lot of venture firms, they might not know that far in advance their needs. So, so it's hard for them to forecast. Like they'll put a job posting out, a year in advance, or, at the same time the consultants and the banks do. That plus a lot of these firms aren't that big.
Yeah,
they don't
exactly.
have these big structured recruiting processes. And so that's also part of it. So like you said, a lot of the recruiting process is amorphous, and, you won't find a lot of internships for venture because it's it's hard for a VC firm to give a meaningful internship over 10 weeks or so that, it's hard to carve out something meaningful on both, for both parties.
Exactly.
So a lot of it, So a lot of it's networking. A lot of it's, a lot of my colleagues even started that knew they wanted to go back to venture, like right when they got into school. I mean, they were, credit to them. They started their networking almost immediately. And then, and a lot of times when people network, it's not necessarily just the first interaction, right? Like, I think folks should keep in mind that it's, sometimes it's the repeated interaction, or, you meet with someone, and then if you have a reason to meet again, or you came across something, or you want to bounce ideas again, and you say you're in town, and people might, or hopefully they remember, and maybe in that first time you're looking for something, but they remember that you have some meaningful ideas and you're very thoughtful about how you might invest. And if you stay in front of people, maybe by the time they are looking to hire, then they think of you. And so, but no, I'm to be very transparent, it's not as straightforward for sure as investment banking or management consulting.
Yeah. And can an MBA actually hurt you in the industry? I mean, because of course we read online all these debates like, oh, you don't need an MBA to start a company or to jump into venture capital, or you do need an MBA. An MBA helps. Like, what are your thoughts there?
I don't think it hurts.
Yeah.
It's so I'll put it this way, from the venture, because you mentioned both the startup and the venture capital community. So if you go to a VC firm with an MBA, it definitely will not hurt. The majority of partners, so unless it's like a very, very operationally focused firm, or let's say a lot of partners have operational background and they don't like MBAs. There could be some like those out there.
Yeah.
No, I mean, but it's not like they don't like MBAs. It's like if you have operational experience, then you want to get an MBA. It's not like,
right,
as a rule, they're going to rule out MBAs, right? So generally speaking, I don't think it hurts at all.
Yep.
I think from a startup standpoint, sometimes there's a stigma, which I think you're alluding to. And I don't think I don't think it hurts as much. So from the startup standpoint, if I'm a venture capital investor, so I'll give an example. There's one investment I worked on where, I met a founder, and he, it was, a younger company early, and a younger founder also, and very much more of a technology guy. And the fact that I worked at a startup for a little bit before, and I had engineering background before I went into my current venture role, he actually appreciated that. And, maybe he wasn't necessarily looking at the MBA, but he appreciated that, I could relate a little bit to him being at an early stage company. And so, but I will say, as become more common in the past 5 years or so for MBAs to go into technology and entrepreneurship, that there is less of a stigma of MBAs. It's not the stigma I think there's a stigma of MBAs, maybe not wanting to do certain types of work, let's put it that way. But it's more like, a lot of startups just don't know what to do with an MBA. Someone who's graduated with an MBA. Like, they don't actually understand the skill sets and capabilities of people who come out with it. And so it's more, I would say, misunderstanding but that's from the startup standpoint.
Right.
Since we're talking about venture capital.
Yeah.
From the VC firm standpoint, I don't think it would hurt at all, really.
Yeah. No, that's really interesting to hear. It sounds like it's more, like you said, a misunderstanding, perhaps, at least on the startup side, and at least on the startup side, maybe just more of an attitude thing, right? Like, oh, this MBA might not get his hands dirty doing X, Y, Z, but it can't hurt you, is like what you're saying. And I think that makes a lot of sense. Do you help at all with the hiring at your firm?
At my firm, I've done a little bit. I mean, to be honest, I haven't done as much as maybe I've been involved in previous roles. But,
right. Well, if you could shed, any light on like what these venture capital companies are looking for in hires, that'd be great.
Oh, absolutely. Yeah. So, I mean, if I think about, I do interview people, so don't get me wrong. So, I look, since I guess a couple of different things. So the job description might say, what people will commonly say is like someone with former either investment banking experience or management consulting experience or venture capital experience, or maybe product management experience at a reputable startup. So you'll see a lot of job descriptions say that. In my interview, what I want to ask people is, what trends do they follow? How do they think about certain trends? Or, I might ask, like, what do you think is an interesting trend going on in, let's call it a certain space, or let's say technology, or, if it's a healthcare fund, healthcare. And then, you dive in a little bit. Okay. So where do you see things going? Is there an interesting company that you haven't think it's interesting? Like things like that. And I'm trying to get a sense for how they might, because they would need to evaluate an investment if they were to work in venture. And so I'm trying to get a sense for the candidate's investment acumen.
Yes. And anything else?
That's probably the most relevant.
Mm-hmm.
Unless I think that's the most relevant. I would like to see some, ideally, right. It's someone who's, if they haven't done venture before, it's someone who I think would be comfortable in a transaction. And what I mean by that is, like, someone with investment banking experience would be very comfortable with that. I think someone with management consult experience, they don't necessarily have that, but I'm confident they would be comfortable with it given their background. And, like folks with operational experience, like if I can get a sense that they can understand they would understand maybe the technology and the industry as well. Like, and then, like doing a deal is not, it's not rocket science, but it's like, can this person be trained? Right. And not everyone's going to come in with all the skill sets, but just having that confidence in that candidate. And I guess the other is maybe, what's another one? I think getting a feel for management teams and understanding people that's an important criteria for, I think, any investment field. It's not, I think it's one of those criteria that's not, maybe it's not a deal breaker getting in, but I think to be successful longer term, have that. So maybe you can get a job without necessarily, having the EQ to read people, read management teams, but longer term to be successful in the business, you need to be able to do that.
Yeah, I mean, absolutely. I mean, any other sort of qualities you've seen in colleagues and partners that are really successful in the industry?
I just think that of the ones who, if I think of like different prominent venture capital investors, so I think it's a lot of it is, I think they're demonstrating their value add to the entrepreneur is paramount. And like, that's what separates them. And they just have, whether it's through their experience or through their contacts and networks, and, whether it's let's say if it's an early stage company that's just trying to land customers, right? That they have this, this Rolodex that they can go to of different VPs or SVPs of different companies that their startup could potentially sell to, or maybe if I've been so for example, one of these board meetings I went to where I'm clearly the youngest person in the room, a lot of partners there, and they can make, these partners can make this observation and provide guidance to the startup just based on their wealth of experience and a lot of different business models that they've seen and have worked and not worked. And they can give, for me, if I make the same comment, it's like more like theory or an idea. Whereas if a partner who's 15 years or more older than I am, they have the credibility. They can, they've seen all these different things, and, they can provide that advice and guidance. And so when capital is such a commodity, and
you think so?
Good startup,
you think so now?
Yeah. It is.
That's interesting.
Capital is a commodity. And so any good startup is going to have their pick of venture capital firms to work with. So when you win out by the value that you can bring to the entrepreneur. And that value can be different things, but you need to demonstrate value over and over again and build up a reputation also among other investors, because you're going to be co-investing with a lot of other investors over a career. And so people will know you. They'll see you at the same networking events, at the same conferences, at the same board meetings. Like, it becomes really small. And so demonstrating value to the portfolio companies is how you stand out long term.
Makes a lot of sense. And what would you say for you are the best parts of the job and the worst parts of the job?
I think the best parts and why I got back into investing also after doing the startup is it's actually, it's very intellectually stimulating, I think, being able to look across different industries, or in my case, subsectors of technology, trying to figure out where trends are going, not only who's doing what, but then you're also trying to figure out, okay, like, the company has their own story. Which one do you think is the most believable, and who can most execute on it? And right, if I believe in this company, can I be on this journey with them and see, this trend evolve, and, hopefully, this company that if I'm working with, help them grow. So there's the intellectually rewarding part of just learning, right? Learning about different markets and different industries and meeting a lot of companies. But there's also the part of, when you're investing and you're working with folks who are, pouring, in many cases or most cases, these entrepreneurs are pouring, blood and sweat, so to speak, right? Companies.
Yeah.
And helping them grow and be successful. That's rewarding also, right? If there's even a small role I can play in that. So that's, so that's, I would say that probably those two are maybe the most rewarding. And then I think your other question was most annoying or something.
Yeah. We'll call it most annoying. I called it the worst part, but let's call it most annoying.
Oh, okay. I think in this industry, I think you have to have, because you're betting on things, on companies that a lot of times might not work. I think there's always a certain level of optimism you need to have about, a company, a startup coming to fruition, right? That's why you're investing in the first place, right? And entrepreneurship for the startup is all about optimism, right? So, as a venture capital investor, it's having, in some ways, this eternal optimism of, trying to be at the forefront of new ideas that could, there are cliches that get thrown around a lot in the Bay Area, but companies trying to change the world. And if you can be part of this and somehow and fund these companies and be involved. But the flip side of that is, if you think about how many companies the typical venture capital firms meet in a year, and either the firm itself or each person, and then you look at how many companies you actually invest in, it is such a small percentage. It is a very, very small percentage. I mean, it's way less than 1%. And so, sometimes it can be easy to, I wouldn't say it would be negative, but maybe you meet a lot of companies that maybe they're just not there yet, or, they're not ready for investment, or you want to make an investment, but it's, from your standpoint as a venture capitalist, you want to make an investment, but for a variety of reasons, you just keep meeting companies that just aren't suitable for your investment and your style, or your firm style, I should say. And so sometimes you could sometimes you end up meeting large numbers of companies without investing. And sometimes, and that could be the right decision, but that can get frustrating as well.
Yeah. No, that's really interesting, because it's almost like this paradox, right? Between what you were saying, there's certain companies and certain founders that will have the pick of the litter when it comes to VCs, right? I mean,
yes,
that will get VCs really excited, but at the same time, you're meeting lots of companies and lots of founders, and it's tough for you sometimes to find the right fit, very tough sometimes. So why do you think there's that paradox? Is it a lot of the story and the hype of certain companies because they have successful founders or so forth, or how does that work? And it's hard to probably explain, but I'd love to hear your thoughts.
It's a little both. So the first part of what you said, I don't know if I'm going to be answering your question, but the first part of what you said about, so any tremendously successful startup, usually, because only so many investors can invest in a round, you can only fit so many in a round of financing, that they just have their pick, the very best startups. And so as an investor, you're trying to fight your way in.
Got it.
So that's on the first part of what you said. I think the other part that you're asking about is, a lot of venture firms have different styles I think the first, mantra of investing in any asset class is you always have to invest according to your mandate. And so, at Hewlett Packard Ventures, we look at certain things. We don't look at certain areas of technology, for example. And we look at companies with a certain level of maturity and certain trajectory. And so, we might have certain criteria, and a lot of other venture firms will have their own criteria, or they might have, there's one firm, for example, that just focuses on cybersecurity, or there's one or some focus on, more SaaS applications or software as a service type software companies, business models, or, that might be more on the enterprise tech or something. And so it depends on the firm's mandate is a big part of that.
Yeah. Yeah. That makes a lot of sense. And then what about VC opportunities in the US for international students? What have you seen on the ground there for international MBA students?
For international MBA, I think it's, I wouldn't say it's, you mean, so how likely or not likely is an international student going to be able to get a VC job? Is that the question?
Yes. I'm sorry. I made it intentionally vague. But yes, that is what I mean, because so many international students, are interested in VC. They hear about Silicon Valley. They want to break into the industry. So they're thinking, let's go to a top, big time US MBA, and that will help me get a ticket in.
Right. And so, to be transparent, the number, I think it goes back to what is the candidate's value add?
Yes.
That will trump anything.
Mm-hmm.
So, that being said, if to be transparent here, I think that the numbers I've seen, so a lot of venture capital, especially, a lot of it's about networking and, right, not just getting into the job, but after the job, or once you're in the job, I should say, and your ability to network and who your existing network is, people are going to be looking at. And the reality is a lot of international students have better networks internationally or in their home country.
Right.
If they're comparing, let's say, for example, you have 10 people from Wharton, 10 people from Stanford, 10 people from Harvard, or what have you, and there's one spot and there's one international student and, the rest are US. And if it seems like the US folks have better networks, let's say within Silicon Valley or elsewhere, the reality is partners do think about that. And that's not to say it's trying to discourage people, but it's something people think about. But going back to, if you have real value to add, if you have, strong technical expertise in something, or like I said, operational expertise that no one else has, or if you're going to like a healthcare VC, and sometimes people have, MBA, PhDs or something, right? Like that matters, and that helps as well. And one of my classmates that happened. And then, so the other thing I'll mention is, so I had a lot of classmates who came from China, and if there's an angle where, some VC firms, like there's a lot of cross-border, deals and firms that do have a cross-border focus. And there've been a number of VC firms that popped up I shouldn't say popped up, because they've been around, but maybe it's gotten more popular, let's say, in the past 5 to 10 years. Some of my classmates went to those VC firms, and honestly, they, since I'm not from China, they had more of an edge going there than I did.
Right. And
than I ever would. And, so I think you have to be able to play to your strengths. And if you can offer value and your strengths beat out, could align with what a firm's looking for, then I think there's no reason why an international student can't get a VC job. But so there's no reason, but it's just, in a numbers game, I think people have to be realistic also.
Yeah, no, really appreciate those insights. And for someone who wants to learn more about the industry, what would you recommend as like the most helpful resources in getting to know the industry and prepping to network or build your story, build your case in venture capital?
Right. So, I think the good thing now versus maybe 10 years ago or so, there are a lot of there's a ton of resources online to learn about just venture capital itself, and like deals and term sheets. And well, you don't necessarily need to know about term sheets specifically to get into the industry, but it's just how the industry works. So, I mean, there's some prominent VC firms like Andreessen Horowitz or First Round Capital. They have very resourceful blogs on, some of it's about startups, but some of it's also about just VC investing.
Yeah.
So those firms, I know Fred Wilson has a good blog.
Yeah.
There's, Mark Sister of Upfront Ventures has a good blog. And so some of these partners have very, just like a lot of great information about investing. And like I said, some of it's about startups, so not necessarily VC, although they're all interrelated, but they're really good.
Yeah.
And I'm sure there's a lot out there that I'm forgetting right now.
Well, I'll be sure to link to all those blogs that you mentioned in the show notes. And yeah, I mean, I just wanted to kind of give you the soapbox one last time. Any last advice to MBA students trying to switch into VC? What should they keep in mind? And yeah, just, any words of wisdom to share?
Yeah, absolutely. So for people who want to get into VC, it's like we said, it's an unstructured process. And, if you want to go into VC, that there's no reason why you can't. And sometimes people get into it in different ways. And maybe you take an intermediate step to get there if you don't get there immediately. Or maybe you go to a startup, or maybe you go to, and sometimes people get into VC without actually even intending to immediately. All right. So a lot of these things happen. What I will say is, I think in any industry, I mean, you're always networking. There's no job application after school anymore. I mean, really, right? Like, you're always going to be networking. Mm-hmm. And so, and so I would encourage people to just, to network, to reach out to, you'd be surprised if you're professional and tactful and you give people a reason to talk to you, you'd be surprised who's willing to have a chat with you, and, you're being polite and, hey, I want to learn more about this, your company and your firm. But it's, I think being tactfully aggressive, I think is something I would recommend.
Yep. Yeah. No, that's crystal clear.
But people can get into the industry. It's not rocket science.
Yeah. Yeah. Actually, I had one more like tactical question. Your answer reminded me of how important, like, is how can I phrase this question? How important is it where you get your MBA to landing these jobs? Like, for example, because San Francisco and New York and Boston, I guess, are probably the three big VC cities in the US. Do you think that going to schools in those areas really helps you? Or do you think that, someone who's in Texas or LA or Chicago can also break in? I mean, of course they can break in, but do they have a similar chance to break in?
Right. So I think, of course, they can break in. I think the geographic reality is, and even, for example, for, Wharton and my classmates, right? If I were to compare us for Stanford, that Stanford, let's say, the Stanford GSB folks they're so plugged into the community already, just by the fact that they're already there.
Yeah.
And they're, the fact that they're going to VC networking events that I hear, or that I heard,
right.
In the past, they can go to VC network events throughout the year, that they can maybe do some contract work or consulting work during the school year and meet with the VC firms. That's always going to help, right? That's something that a Wharton person can never do, because they're just not on the ground there.
Well, now you guys got a semester, right, in Silicon Valley?
That's true.
Yeah.
Yeah, that's absolutely true. Yeah, but I was saying, I was just more generally speaking.
Yeah.
And that is the reality. And when you have so many, whether you call it type A or aggressive people, just being in an MBA program, right, and you're competing for a certain number of slots against very smart people from different schools, people are going to get in front of VC firms however they can. And so it's not to say you can't get into the industry, but it's just, I think certain schools, just by nature of either, where they are or their networks, or there are some built-in advantages that different schools have for different either geographic areas or sectors or what have you.
Yeah. Yeah, for sure. I mean, even Stanford, I was looking at this report in 2016, I think it was something like 3% of their graduates got into VC, and that was the highest among all business schools. So,
that doesn't surprise me.
Yeah. So I think that's, just kind of brutal, but, matter of facts, right? Those are the percentages. So and we're talking about, an entire class of super talented people. Surely not all of them want to jump into VC, but I'm sure many of them did. So I think, Garrett, really appreciate your time and your insights. I've learned a ton about how this all works just talking to you over the past hour, and I'm sure a lot of our listeners will too. So thank you so much again for jumping on the Touch MBA podcast.
Absolutely. It's been a pleasure.
Thanks for listening to the Touch MBA podcast. Don't be shy. We have a mailing list. Go to touchmba.com and get yourself signed up. And we'll keep you posted with the best tips and insider interviews on how to get into your number one school. You can also find us on Twitter and Facebook at Touch MBA. See you soon.